You too. How are you doing?
Yeah, good, man. Welcome to ASFX. I'm excited to
Thank
talk to
you.
you and do a stream, man. I've been following you for a while now. We've been following each other. I think we both definitely appreciate how each other trade. Me,
Of
especially with
course.
you, man. Like your discipline is just really inspiring for me, and you've even helped me kind of adjust my systems a little bit and start to go for a lower R multiple. So I mean, I definitely want to try and take some trades. The market's a little slow right now. Maybe we can go over what you're thinking, or if you took any trades. But I definitely also, if it's slow, I want to get into some of like your mentality on how you engage with price and your philosophy behind how to be a profitable trader. Because
Absolutely.
yeah, man. But are you seeing anything on the markets? Let me if you want to get your screen up too,
All
you
right.
could click on present, and we could see what you're looking at.
All right. 2 seconds. Present. Wait. Because I'm streaming on my Discord, I just have to.
I know I'm definitely not really interested in a long until we maybe sweep out these internal lows. I'd imagine you might be thinking something similarly.
Okay, so right now, let me see here. Okay, let me just present screen.
There we go. Here, I'll pull you
You
up
see
now.
my screen? All right.
Yeah, perfect.
So right here, I can see that the hourly candle has created just a super small downwick here. So it's usually a it's not something that we usually see. Those candles that has no downwick. It happened right here, which was surprising. But right now, what do I think? I think we reacted to that hourly fair value gap right here,
Yep.
and failed to close above the upper portion, which means that we are in some sort of bearish order flow. We have SMT with the H1 highs. So I'm not really looking to go long for now. It's too
Nice
risky.
catch. I missed the SMT.
Yeah, so
Nice
there's a
catch.
yes. And really, I think the only opportunity you could have caught was on ES for that long at like 11:02 when that breaker got created. So right here we had a nice breakout of that candle right here on ES,
Mm.
and we went to sweep internal lows. I really hate to play reversals. I think it's not hate to play reversals, but I really think the biggest flaw and biggest mistake of ICT traders is always to try to reverse the market
Yeah.
all the time. It's like, of course, yes, you could have a. It does not mean that you have a buy side liquidity sweep and then a market structure shift uh, in the middle of nowhere that you're going to see lower. It's usually the opposite, and that's really what I do. I really like to go against those market structure shifts and try to go long when everyone is trying to go short in the middle of a
Dude,
range. So bullish. This thing is
100%, man. That was a big issue for me when I first started learning ICT. You're always looking for the reversal. You're watching that 2022 model
yeah,
and
exactly.
just thinking, yeah, I just follow this pattern and I'm in.
Yeah,
Especially with US indices. I mean, they're so designed to just follow their trend. I love looking for the same thing. You see that 2022 model kind of looking like it's going to play out, and then look for a sweep of some internal lows and basically fade that model.
exactly. So right here we have a lot of accumulation that is building up. So I what I do in those kind of situations is that I really wait for a reset. When price is not clear, just wait for price to dig down to a 15-minute bullish for value gap. So you're going to see, oh, are we reacting to that bullish for value gap? And is there passive buyers sitting on the bid here, absorbing those sellers, and then you see, is there inversions? Is there a 2022 model forming after the sell side liquidity sweep? That's really what
Bro,
I'm looking for.
yeah, no, I completely agree. This is what's so funny about ICT is I just basically went over the same thing. Like if I go back to my chart real quick, I have the same exact levels marked out as you. I have the 15-minute fair value gap right here. I said the same thing. I really don't want to do anything until we come down and take out these lows. And
Yeah,
then like maybe a long makes sense to me at that point. I am aware that we're inside that 1 hour gap. I have that marked out as well. I was not aware of the SMT. I didn't, so I missed that. That's a good spot. But in these types of bullish conditions, I am not too like I could see that SMT as what helps drive us down to maybe sweep out these lows. But then if we hold the midpoint of that 15-minute gap and get like a 1 minute inversion model, like that's something that I would put risk behind for 1 R, 1.5 R. You know what I
yeah,
mean?
exactly. Yeah, that's a
So
good thing. Also, like I think also one thing about a lot of traders is that yes, you could have a system based on higher RR and the fact that you want to risk more, you want to risk less than what you make. But the thing is that it's not every day that you will see a good opportunity to go for 2 Rs, 3 Rs. It's not every single day that you have those distribution on the
Mhm.
daily candle. So it's really good also uh, to know how to scalp in order to position yourself in days that are less probable to distribute.
Exactly. Yeah, I couldn't agree more, man. Like those opportunities come, they're available, but they're not every day. And I think that's a big issue for people. They're trying to find that 3, 4 R trade every day, and some days are just not going to give it. Actually, Xavier from the chat, he wanted to ask, what is SMT? We have a lot of non ICT traders here, so do you want to explain what SMT is real quick, Amos?
Yeah, of course. So SMT is
Let me go back to your chart. There you go.
okay. So SMT is when you have so you have ES and NQ. They're both correlated pairs. Okay, which means that they act, they should act the same, and ES's liquidity impacts NQ's liquidity. So let's say when you're looking at with ICT concepts, every lows uh, should act. Let's say this low here should act as a pool of sell stops, okay? Which means that people are buying and putting their stop loss here, and if they're getting triggered, then a pool of sell stops is getting triggered. So you have long opportunities. We see basically low sweeps as a reversal opportunity, and we see high sweep also as a reversal opportunity. So let's say here, this is NQ, and NQ creates a low and a lower low, okay, right here. And ES creates a low, but fails to create that lower low. It creates a higher low instead of a lower low. So right here, there's a divergence in the structure. So which means that NQ triggered that pull of sell stop while ES did not. So which means that there is a divergence between those correlated pairs, which is a probable it's a cue that price is most likely going to start reversing. Okay, so what do you want to wait for? You want to wait for NQ, let's say NQ or ES. So here NQ swept sell side and NQ failed to sweep sell side, but then broke structure to the upside. So right here, this could be enough for you to take a scalp to the upside and take whatever you want in any one-to-one. I really think that SMTs are good, but you cannot frame your system based absolutely around it. It's a
Mhm.
good. I think it's a good. It's a good.
It's a confluence.
It's a good confluence, a good concept, and I use it a lot in my system to either protect myself and put my stops to break even to not get reswept by the manipulation leg created by the SMT, or also to take out partials But if your system is only based on SMTs, I really think there's some missing parts of it.
So, so that's a good question for you. What would you say encompasses your model? Like, are there set things you need to see every single trade, or is it a bit more discretionary? Do you have like an overarching understanding of ICT and you could, you know, put certain things on the back burner and use other things, but or are you like systematic with how you're going to enter and exit?
Um, I'm really systematic with my approach because of the fact that um, I'm really I like to play mechanically because I tend to always do the worst possible decision when I trade discretionary. You know,
Hmm.
I'm really when I say I'm not that guy, I'm really not that guy to trade discretionary. So I adopted like a system that has mechanical aspects to it. But basically, this is pretty much what I trade. Okay, if I had to put it in words, is I wait for a trend to be put in. I wait for a trend to be put in. I wait for price to create, to tell me, okay, unless we're bullish, we're absolutely bullish. You can read it easily on your chart. It's going up, and it does not want to reverse for now. Then what do I wait for? I usually wait for an area where people are most likely going to get squeezed. Okay, what is, in my opinion, the trades that have the biggest expected value, the highest expected value, and the trades that you could really win the fastest and you can really replicate in the long run are the trades where you can locate buyers and sellers and possible areas of covering. So right here, what do I wait for? I basically wait for price to create a trend, then fake out um, any participants in the market. So right here, you see that bearish market structure shift. And I know this is an area where there's going to be blood. There's going to be blood because there's going to be people that wants to go short here and put their stop loss above this high. But there's also people that will want to buy here on the trend, on the pullback below this low, because it's a really good long opportunity. And knowing this, I know there's going to be a lot of transaction happening here, and I know there's going to be um, way less, a chop or weird price action. So when I can see this pattern form, I know there's going to be possible blood. So what do I wait for? I wait for I don't try to play the reversal, because most of the time, like a good trader says, you're going to end up with a smelly finger if you try to predict the high of day all the time. So what do?
Hmm.
I always try to play the trend continuation. So right here, what do I wait for? I wait for a structure to create. So right here, what is the structure? For me, it's an order block, and I also wait for value gaps to be created. And what are those telling me? They're telling me what the market should do once I revisit them. You see this order block, bearish order block. What does that tell me? It tells me that basically I have a view of the market. I have a algorithmic view, but also since I was trading order flow back in my day, I have that market auction theory view. Okay, so every single
Interesting.
up every single up move for me is buying pressure also, and every single down move is some selling pressure. So right here, what can I see? There's some buying pressure at this level, then selling pressure that squeeze all those buyers that try to play the longs here. So what does that mean? There's a lot of possible buyers here that got squeezed. Okay, so buyers got squeezed. So what are they going to do? They're going to probably push price back up. Okay, manipulate price back up to where they initially started the move, to their break-even spot, so they're going to click sell. So I know that this order block here, if we're truly bearish, we should respect it in order to create a new low. Okay, that's what I say to myself. So right here, I have an order block created, and let's say we have a 1 minute bullish for value gap, bearish for value gap here. And what does that tell me also? I know that what drives the market is aggressive buyers and aggressive sellers. Okay, basically, if I can summarize it super quick, then let's say the market is an auction and someone wants to buy the candy at $21. Okay, the reason why price would go up is that someone wants to buy the candy at the market price, even if it wants to go at 22, 23, 24, 25. So knowing this, I know that aggressive buying moves price up, aggressive selling moves price down. So if I know where aggressive sellers are located, and for me, I use fair value gaps because I know if I did not trade between this candle's low, this candle's high, there is a lot of aggression inside of this price action. So I know where my sellers are located. Once
Yes,
I
and
know this
just
information,
sorry to cut you off, but I just want to make sure they understand. So, fair value gaps are essentially our way of reading that there were a lot of market orders
exactly,
executed, which
exactly,
in order flow and auction theory, for a lot of people don't know this. Like limit
exactly,
orders and stop orders are, um, what's the exact word? They're not aggressive. They're I'm
exactly.
trying to
They're passive.
not aggressive orders. They don't move the market the same way that a market order moves the market
Like
directionally. That's a
you
really
see,
important thing to understand.
exactly. So for me, what do I see in this leg? Let's say I see that there was a lot of market orders inside of that candle right here because we couldn't trade uh, on this third candle. We couldn't trade back to the wick of the first candle that created the fair value gap. Okay, you see right here, there's a small gap, and this small gap right here can tell me that, oh, the sellers are located between this candle's low, this candle's high here. So if I know this information and I can predict, and I know that these sellers are located right here, when I'm going to start heading above them, they're going to be forced to cover their position. And covering is a big aspect of my trading. So let me just explain here. So right here, let's say we're in a trend, and then I see there's most likely going to be blood here. I can locate sellers. I can locate where I want buyers to hold. So for me, I'm always trying to play one way and not two ways because I don't want to get caught trying to short the market when, let's say, I don't want, I want one bias and I want to confirm with everything that I see on the chart. So right here, I have a bullish trend. I am bullish bias. I want to target this high. So what do?
Mhm.
I wait for sell side liquidity sweeps. I wait for order blocks and fair value gaps to be created. And once these are created, I wait for price to confirm me that, okay, if we're truly bearish here, we have possible sellers that are going to defend their position inside this order block and inside of this fair value gap. If we're truly bearish, we should respect both these areas. So go right here or create a new low, or go inside this gap, create a new low. But if I can see that we hold here this speedy array and we get above both of them, this is my 2022 model and this is where I'm going to enter. Why? Because
Yeah.
there's a squeeze. I can locate, okay, the sellers. So the sellers here should have defended the position. The aggressive selling was also inside of this gap. Once I know they're going to get squeezed, I know there's a lot of covering that will happen. And what is covering, guys? It means that basically we're in a market that is super efficient and in a market that is driven by algorithms and big institutions. So what you see on the chart is a fight between those whales. Okay, so what you can see, if you see that gap, you see that, sellers are located right here. So big institutions are located inside that gap. And what does that mean? They went short. So if price starts to go against them, they have so much buying and selling power that they can manipulate price back down to where they initially started that move. And if they can do that, then what are they going to click on if they want to cover the position and get out of the position? If they clicked on sell first, they're going to click on buy to get out, which is the aspect of covering. And if they cover here and I go long, every buyer is going long, and every seller that usually initially went short are going long also to cover. This is when you're going to have a sharp move to the upside and a system that will that can yield you a good return in the long run, in my opinion. It's when you can really read uh, where buyers and sellers are located.
Yeah, man, that was an incredible explanation, honestly, and
Thank
I
you.
really
Thank you.
like that you explained the auction theory behind it, because a lot of people that trade ICT or even just many retail traders, they don't actually understand the actual nuances of that. It really is important to understand it fundamentally. Like the market is driven by market orders, not limits and not stops. So when
Exactly.
those stop losses get triggered, and then other people are also hitting the market, that's what's going to drive price up or down. And
Absolutely.
that's like the whole fundamental principles of ICT is just understanding that old highs and lows um, get targeted by market makers, institutional order flow. And that's what we're trying to do. We're trying to identify, spot the reversal, and not just reversal. I mean, on a low time frame, it could be a reversal within the context of a high time frame trend. But we want to see an old high or low get swept so that liquidity has been taken. And then we're looking for confirmations to then target the opposing high or low inside that range. And that's the crux of it. And just understanding the fundamental nature that the market is attracted to old highs and lows. And that's why I was always attracted to ICT, because it gives a narrative behind why price is moving the way it's moving, and just helps me with an understanding of looking for clear targets instead of just maybe saying, okay, here's my entry signal and I'm going to target 2R. But like, what if 2R is not going to make sense in the context of where the market should be going? So it drives that narrative for me.
Yeah, exactly.
You explained that perfectly.
This is the exact same thing I want to speak about. It's like I saw someone, let's say he made a video. It was like, you're going to work 8 hours a day and make $20 an hour to make $160 with a regular job, but you cannot take out your profits in 5 minutes. And this is so wrong in trading, because if you want to make money in the long run, you need an actual system, and you cannot really base your trading on, getting out just because you're up $160. In my opinion, if you want to make money, you need to know to position yourself in structural areas, and to know, okay, this high has way more chance of being swept than this low, and I'm going to position myself accordingly. If it's $160 risk, then it's good, but don't get out of your position because you're up 160 if your target has not been hit. Okay, because if you do this in the long run, then you just have no edge, and the market is going to snatch that money back from you one day or another. It's just a
Amas, yeah, the chat is actually asking, do you have an example of a trade from earlier on the charts you could show us? It looks like they're interested in this. Do you have any like markups or anything you could just to show the actual price action?
To be honest, today there was no trades for me, but the only trade I saw was on yes. So right here. So you see, basically right here. Okay, what do I say to myself in this exact scenario? I'm like, we're in a bull trend. You see, bull trend right here from 9:30 open, we did not stop going up. So I'm like, I'm not going to try to fake the move right here. I really think we're going to keep going up. Okay, as simple as that. So right here, I have this high marked out, and I know that in a bullish market, we have way more chances of drawing back towards highs. So right here, what do I want to see? I want to see price creating bearish structure. So I know there's going to be blood. Okay? I want people to start thinking market is going to reverse, so they will start selling. So right here, I want to see price digging below this low to create that market structure shift. Okay, right here.
And also for the people that are getting long there and placing their stop near, at the nearest,
also
higher low. Yeah,
exactly. So there's people that also are impatient and want to start longing the market on the breakouts. And these are the people also that you want to take liquidity from and be patient for those guys to get swept before you enter the market. So right here, you see we have an internal low, and at this exact moment, this is where we have a market structure shift on the 1 minute chart. What can I see here? We're on a bullish trend. We had a bearish market structure shift. If I know this, I know that most of the time, if you try to go short here, okay, it's not going to work in the long run if you just play the 2022 model out of nowhere in the middle of the chart that is bullish. Okay, knowing this information, there's a lot of people who are going to go short here, stop loss either above this high or above this one. So you can locate those sellers. What can I see also? We created that bearish order block. All of this structure right here is a bearish order block. Right here, there's if we are truly bearish, we should hold this zone here to create a new low. But if we're bullish, we're going to disrespect this bearish order block and get above all of those sellers that should have held the price. And what is going to happen is that all of these sellers are going to be squeezed out of the market. And if they're squeezed, they're going to push price down back to their break-even spot. They're going to cover, and price is going to shoot up aggressively towards an internal high. So right here, I use this order
Basically the
block.
same as the inversion fair value gap model that I trade.
Yeah,
It's the
yeah,
same idea.
exactly. You see here, we formed a gap. So I have my gap and also my big order block here. So I have two PD arrays that are telling me if we're truly bearish, we should hold them. We should go down. But right here, what I'm preparing myself to do is playing that trend continuation play. And once we get above this wick here, or the opening price of the series of down close candles that created the sweep, I have what I call my change in the state of delivery. So a signal that all those sellers are getting squeezed. So right here, you can see I have both happening here. I have my inversion for value gap here. So I know the sellers located between this candle's low, this candle's high are getting squeezed, plus the people that should have sold during that order block creation got squeezed by that candle. Look at the displacement candle right here. It will not lie to you. As soon as we close above it, the opening price here, I'm gonna go long, stop loss just below this low. And I try to aim the most recent high for a 1-to-1. It could be, you could be like, oh, Amas, I really hate your RR. But I really believe that trading high RR systems, if you're a prop firm trader, is super hard. Okay, you're playing on hard mode because there's something called the risk of ruin. So basically, a system, the higher the win rate of a system, the less probable. So the less likely you're going to see multiple losers in a row. Okay, that's this concept. And
where
if
you have limited drawdown in a prop firm.
Exactly. So let's say you have a 50K account, you have 2K drawdown. Then if you have a 40% win rate system or a 30% win rate system, you could definitely make those profits and hit those big winners in the beginning, and take out your profits. But most of the time, a low RR system is attached to bigger drawdown periods and also more losers in a row. And if you lose a lot in a row with those small drawdowns, it's going to be really hard for you to get the payout. So 1-to-1s is something that is also really repeatable in the market. You guys also, it's not because we're trading prop firms that we are not real traders. In the long run, guys, trading is a real profession, and you need to have a system that is repeatable in the long run with really strict parameters that you can repeat in the long run, and you can make money off of every single day. So trying to play those home runs and is for me, it's way harder, especially with prop firms, and it's hard to repeat in certain market conditions. Okay, so it's not every day that you're going to see a big distribution. Of course, you're gonna have that FOMO once you see 25 bullish candles in a row. But let's say if you don't have that system in place, but once you have that system in place and you're like, you know what, I'm just going to go for base hits and stack my wins every single day, it's going to start being better for you, in my opinion.
Yeah. Yep. Perfect, man. Yeah. Really great explanation. So this is what I'm going to do. Let me go to my chart real quick. Some of the guys are asking about us analyzing ES, where we're at right now. So I think it's pretty similar where we both are probably feeling. I think ultimately, you can tell me if you agree, Amas. I think we're coming for this high before the end of the day. That seems pretty likely, in my opinion.
What is it? The daily high?
Yeah. Yesterday's Monday's high. Yes.
Yeah, Monday's high. Yeah.
We just missed it. I mean, as of right now, I would like to see that get taken, but I'm going to have some line in the sand levels. So for me, I actually like that we're pulling back here. Now, I am aware that on the higher time frame, we do have an SMT, a pretty large SMT. NQ has taken out that high, so NQ is much more bullish than ES technically right now. So I would personally prefer to long NQ over ES, but if we're just analyzing ES, this is what I see as a clear target for the day, but we're going to have some lines in the sand. So that's where I would mark out. We have a 15-minute fair value gap right here, and it looks like we are getting ready to tap into this level. So what I'd be wanting to see is for us to engage in this level, and then if we got an inversion model after tapping into this, I would consider a long to then target these highs. But I do have to be aware that we have run up quite a lot and we have some relative equal lows right here, which could be a target. So for me, I'm going to be seeing how we react inside this 15-minute fair value gap. If we start to push right out of it and then we get kind of what Amos is talking about, which I mean, this is kind of looking like it could end up playing out. I don't like that we have these relative equal lows right here, not gonna lie. So that kind of gives this potential idea a knock. But this could be exactly what you were just talking about, Amos. You can correct me if I'm wrong, where we get like a fake out market structure shift,
Yeah, exactly.
maybe right here, tap into the imbalance, and then what I would want to see is for this fair value gap to get ran through. And I think that could provide a long. But this is why I love the inversion models, because just because we're tapping into this level, I don't necessarily have confirmation. So like the confirmation would be a closure above here for me and then targeting that high. But until that happens, this is what can keep me out of a bad trade. Until I get my confirmation, I don't need to take it. So as of right now, I'm going to be really interested in how we react inside this zone. If we start slamming through it, I would actually be looking at these lows to get taken. What do you think about that?
Yeah, I think that this 15-minute gap will tell us where price wants to go. In my opinion, if we disrespect it aggressively, then we have a little bit more chance of drawing back towards those equal lows and getting down towards the fair value gap created at 10 a.m. So resweeping those lows. If we respect it, then start to push up and see those inversions. So those bearish beta rays being disrespected, the bullish ones being created, respected, then you could start longing towards, yes, the daily high. Also, the daily high has no, so the daily candle here has no up wick, which is, you see like a candle right here that has no range high. It's pretty rare. So usually what's going to happen is that you're gonna create and pop that high here, the opening price of that candle, in order to create that up wick. Okay, so what is going to happen right now? Let's say you're bearish, you're going to flip on that candle, and that candle will flip bullish basically, and then it will start drawing back, but you will have that up wick created. If you look at every single daily candle right here, there's always some sort of down wick, up wick, down wick, up wick, down wick, up wick. But right here, if you see, take a look at this candle, it has no up wick, which means that right here, what happened here is that we opened at 6, the daily open, so 6 p.m., and we went down. So we had an open low without any up wick being created. So I know, okay, this was most likely a manipulation down, because we need to create the range high, flip on that candle, create the high, and then go up. So I am absolutely bullish on the daily candle until we form that high here. So yeah.
Yeah, I love that. I'll go back to my chart real quick because I'm starting to think that this is going to be the setup I'll be looking for. We go back to my chart. I like this. I think so far it doesn't look like we're going to hold this 15-minute gap. We still have 8 minutes left on this candle, so can't say for sure, but I do think that this makes a lot of sense for us to actually really get people thinking that the trend may be getting to reverse, stop out the weaker longs that are trying to get long up here at these highs, and they're trying to hold for a home run.
Yeah.
This would be a really ideal setup for me, for us to kind of get that fake market structure shift here, take out these lows, and then this will be the line in the sand for me. As long as we maintain the structure above this overall gap, then I could be on the 1 minute, on the 3 minute, 5 minute, and looking for that inversion model.
Of course. And you see
to
also
target the
here
highs.
on the hourly candle, if we fail to close above the previous candle's high here, the chances of us seeing that internal fair value gap on the hourly is most likely. So you could expect price, if we close right here, you could expect price to draw back, to sweep this internal low and feel this 1 hour gap to then push up, have enough fuel. So sweep sell side, then have enough fuel to draw back towards the daily high here.
Yep. And then also, I mean, on the 1 minute, we have these I kind of see as relative equal highs as well on ES. These are pretty close together. So just another reason that we come up and take that out one more time. So we got 7 minutes left. I'm not sure if we'll be able to find a trade for this stream. It looks like we might not get a setup, but that's totally fine. I think we have some ideas mapped out for people that are interested in taking a trade like this. Yeah, that's the scenario I'm most interested in. Give it some room to come down here. Maybe it happens. We consolidate a bit longer, and maybe the 1 p.m. kill zone session, we can get this. But again, I mean, I'm not totally opposed to this. If this gap holds, we are extremely bullish. We could be looking at a scenario where we actually come up and take this out first before coming down here. So technically we got an inversion right there.
So you strictly trade ES?
No, I trade NQ almost exclusively, but I'm just marking up ES right now because that's what the chat's looking at. Most of the chat trades ES. Austin's a big ES guy. Evan, the other traders here at Apex, they mostly trade ES. Personally, I think NQ is a bit easier for low time frame trading, at least, especially like 1 minute scalping, right? I think
if you're using ICT.
Yeah, exactly. I mean, I think ES can provide more stable moves, but I think you're going to get better execution and better delivery focusing on the 5-minute chart on ES and looking for a bigger picture move, as opposed with NQ. You could be on the 1 minute and scalping these quicker moves and be in and out, and ES looks like it barely moved. But NQ, you could have got your 1R, very quickly.
True.
So yeah, we got a few minutes left on this candle. I mean, it's not enough for me to take it, but I will see how it reacts here. I think we're gonna drive a bit lower. These lows make a lot of sense to me to get taken first. NQ's looking similar, and NQ the same idea. I mean, I want to see these lows get taken, and for us to tap into this 15-minute gap at least, and then I'll take it there, level to level, and see how we react inside that gap. If I do want to look for a long continuation. So we got 5 minutes left. Amas, how long have you been trading, bro? Because I feel like I saw you really pop off like last year. Again, just the way you execute it is really good, man. And your discipline is just insane. Like, guys, if you should follow Amas on Twitter, I'll post his X account in the chat here before we close out. He posts his TradeZella stats and his executions, man. And it really is like a beautiful thing to see because he's one of those guys who take one trade for the day, bro, and then he's done. He has that discipline. But yeah, how long have you been trading?
I've been trading since I was 18, and now I'm 21. So around, I would say around like
young buck, man.
Yeah, long enough, 2.5 years, 3 years. But what I usually say to the people is that when you're so young, you could have someone who started trading 10 years ago, but it's not really. He did not really put in the work, or put in those chart times, and he was really on and off, So for me, I started trading when I was 18, but I was all in from the beginning and was putting in that chart time. So so I would say 2.5 years, but a lot of chart time for sure.
A lot of hours, yeah, man. I'm the same, bro. I mean, I started trading in 2021. But same thing, man. I never had a break. I was just all in from the moment I got started. And especially those first 2 years, like I'm at a point now where I actually think less chart time is good for me. But I think those first couple of years, trying to have a work-life balance when you're trying to learn trading, it's actually hard. You kind of need to be almost autistically obsessed with it, in my opinion, to kind of get through that learning curve. It's really important.
To build your system in the beginning, it's really hard to have a balance in your life, that's for sure. But once you know what you're doing, exactly what you're looking for, then things are getting better for sure.
Yep, it's a fact, man. All right. I mean, yeah, guys, I guess we're going to wrap it up. Amas, thank you for coming on, bro. Really appreciate this. The chat really liked you, man. I'm telling you, a lot of them don't trade ICT, but I think, you explain it really, really coherently. It's really helpful to understand. So thanks again, bro. Definitely come on anytime you want. I'll ask you again sometime. Maybe we could do some more content in the future. But yeah, man, hope you
Absolutely.
have a great day, bro. Maybe you'll find another trade later. And yeah, I'll talk to you later, and I'll close out this from here. Have a good one, bro.
Have a good one. Thank you, guys.